Boy, hello everybody. How you doing? Welcome to our show today. Another fun day in the markets coming up. It's Tuesday, April the 4th, 2023, and I just finished my Gold Bagel member uh, trade alert show. I better change my logo up here to Gold Bagel member. There it is. There it is, right there. Um, Thank you all for being here. Please subscribe and thank you for the thumbs ups today. Appreciate that as you always give us thumbs ups. You guys are absolutely fabulous, and I love you all. Look, kids, I went on a bit of a rant here a few minutes ago for the Gold Bagel members. I gave them a heads up as to what's going on out here. There's a lot going on out here, and there's a ton. So let's get to the quick. Number one, the Dow is higher by 56 points in the pre-market. Great, fabulous, but it's 0.17 of a percentage point. We're topping out. I'll get to that in a second. We're up 13 points on S&P, third of a point, and we're up 50 points on NASDAQ, just over a third of a point higher. Oil is up 71 cents to 81.13. Where do we go from here? All right, Rocket Lab, just quick little thing for you guys. As you're well aware, Rocket Lab was once a SPAC. The SPAC was taken over by the Rocket Lab private company. It's now Rocket Lab, a public company. Rocket Lab has a bunch of money in the bank, like $450 million in cash. They're launching satellites all the time. They got a wait list that's an arm long, getting longer. Their profits are growing every time they launch more satellites. They used to lose money every time they launched satellites. Now they're making money every time, so they're coming around to profitability. Their competitor, one of their competitors, was Virgin Orbit, Richard Branson's company. Virgin Orbit has filed for Chapter 11 bankruptcy. Virgin Galactic or Virgin Orbit is out of money, and they couldn't find any money to be salvaged. And they're going to have to see write-offs of over $1 billion. And the reason Virgin Orbit failed and Rocket Lab doesn't fail is because what Rocket Lab launches into space, you can make money on. It's called low Earth orbit satellites, which means you launch hundreds at a time, and they're in a low Earth orbit, and you need one every so many miles. You have to have another one and another following in the same track around the Earth. It's like a string of pearls. It's like a string of pearls of satellites that talk to each other and talk to the Earth. And you have companies like Spire who manage them and manage the data between each satellite and each Earth station and each computer server farm. And oh my God, it's unbelievably complicated. The bottom line is Virgin wasn't in that business. Virgin was going for the headlines and the glory of trying to get people into space tourism. Yeah, they were trying to launch satellites into deep orbit, and they were trying to, but they had their fingers out too far. They went out for the big headline show. They got Richard Branson into space. Remember that, with his people, and they came back down safely. These guys are out of money, and they're ahead of their time. And the billionaire Richard Branson isn't bailing out his own company, which I find shockingly interesting, and yet I'm not surprised this guy is allowing this thing to go into Chapter 11, because he's not putting his personal fortune on the line to stop a company from going under that has no business in being in business in the first place. They can't make money for years. Rocket Lab will make money immediately, and Rocket Lab is not going to gain in business just because Virgin went under. Rocket Lab is up the year in orders. There's a waiting list to get a satellite. To get 50 satellites in space, you want to go to Rocket Lab, 2-year waiting list, 4-year waiting list, 5 years. They're backed up. They're trying to create rockets and launch them as much as humanly possible, but they're going to do it safely, carefully, not recklessly, because they don't want a failure, right? Rocket Lab is good. All right. The shares of Rocket Lab, I don't know if they're doing anything today. I don't know if this announcement regarding Virgin Orbit's demise is good for Rocket Lab stock. I don't know if there's going to be anything to that whatsoever. It's at 408, up 4 cents a share. I don't know what's going to happen there. But these guys just keep working and working and working and doing what they do best, which is launching satellites, and more power to them. Way to go. Tesla, 196.63, up $1.86 this morning, a slight recovery from the $12.69 loss yesterday. There's concern in Tesla land about the future tax credits that are still available for anyone who wants to buy a Tesla. Of course, competition is always out there, cost of materials, and you name it. And then, of course, there's the Twitter saga and the hidden little problem that's no one's talking about is how much money the solar roof division is costing Tesla to keep doing. I don't know if that division is profitable or not. I don't know if anybody knows because it's buried into the Tesla numbers. So there's some uncertainty there, but it's a darling stock. It's a darling name. It's got the panache. The Tesla's drive are everywhere. I love driving a Tesla, but the stock is up 173 this morning. I think the shares can go lower rather than higher, but they could still go to 210 at any time, but they can also go to 160. So here we are at 196. Watch the shrinkage continue on your option contracts. That's the best part about being a Tesla option writer. Shrinkage from these incredibly high premiums are there. Obviously, the $12 dip yesterday didn't hurt some of you folks in the options world because you saw your contracts dropping. But time is your secret weapon to success with Tesla contracts. What else I want to talk about here? I mentioned in the Gold Bagel Member Award show, there's an article out in the Wall Street Journal today that is not getting a lot of coverage, and it's just out there, and it has to do with Signature Bank, which is that bank that failed in New York, the crypto exchange bank, whatever it was. And it's tied in with Silicon Valley, and the story on that bank is tied into First Republic Bank, and it's tied into insider trading. And today we saw a letter come out in the open world from Jamie Dimon, the guy who's running JP Morgan. Basically, Jamie Dimon is blaming bank failures and bank uncertainty right now on the Treasury and the Federal Reserve. It's their fault because they apparently are making banks hold treasuries, decline customers' deposits. They're making them hold a percentage of these into Treasury notes, government notes, and these government notes are going down in value because rates are going higher. What he doesn't mention is the fact that not all of what they have is in that area. And what he doesn't mention, definitely doesn't mention, is how insiders that run these banks, the guys and girls that found these entities, that create these machines, these banking entities, how they are not putting up enough capital to guarantee the success of the bank. At the end of the day, look, if I want to create a bank and I've got $1 billion in cash, I could try and attract maybe 10 other investors, and they come up with $2 billion more, and we got $3 billion of cash and of assets, and now we try to run a bank, and we try to attract depositors to our unique bank, and we offer payday loans, and we offer credit card stuff, and we offer car loans and whatever. If we get a bank charter and all that, and we attract depositors' money, and we can lend that money out too, we might attract $100 billion in assets. Let's say we attract $100 billion in deposits from thousands and thousands and thousands of people. But if we only have $3 billion of our money in the business, and we're controlling $100 billion of cash that has come into us, what am I going to do with that money to protect against a run on my bank? What if there's some bad news out there about car sales or real estate or whatever, and $10 billion of the $100 billion that's on hand wants to get withdrawn right away, like quickly, especially with this little machine right here. Things can go very fast. Well, if I have 10 billion in cash in my vault, again, it's all virtual reality, it's all electronic, then no problem. But if I don't have 10 billion in the vault and 10 billion of withdrawals come in, and I've only got 5 billion in cash, well, the first 5 billion goes out quickly, and now I have no cash in the bank. I need to get a 5 billion more turned into cash. Well, the 100 billion I had brought in is now down to 95 billion. That money is tied up. This is what these banks are doing in treasury bills, U.S. government treasury notes. Now, some of them are 30-day notes. Some of them are 90 days. Some are 180 days. 1 year note, 5 year note. So I can quickly get my hands on $1 billion just like that. But I need 5 billion right now. And if the rumor is that I'm having trouble raising 5 billion quick, then another 10 billion of withdrawals happens instantaneously because people are always watching and listening. But if I have to sell some of these notes that don't mature for another 3-4 weeks or 3 months or so on, I can't get par value for those notes. Those notes are at par value on the day they mature. The guarantee from the U.S. government. This is pre-collapse of these banks. And so I'm selling these notes for a loss to raise. I got to sell like 5.2 billion in bonds to bring in $5 billion of actual cash to handle the withdrawal. Then I need another 5 billion in cash to put 5 billion in my vault against any kind of additional withdrawals, because I like to have 5 billion lying around any old time I need it. So really, I got to sell 10 billion bucks. I got to get $10 billion in my hands that I have. And I only have 3 billion in the business. I put in $1 billion and my partners put in 2 billion. So we have 3 billion in the business, and we're handling $100 billion of people's money, and we don't have the ability to come up with a quick run on our bank. This is the problem with these banks. This is what did in Silicon Valley Bank. They had $100 billion in withdrawals in a couple of days. They had 20 billion in equity at that, and they were underwater $50 billion in value against their deposits. 250 deposited. It was only worth 200 billion because bonds had gone down in value because of higher interest rates. And that's what did them in. The Fed stepped in, bailed everybody out, is holding a huge loss right now, and the Fed will wait, quote unquote, will now wait for all the bonds to mature at Silicon Valley's bond holdings, and it will be paid out from itself at par as time goes by. But there will still be billions in losses. If I, as the bank creator, and my buddies don't come up with another $3 or $5 billion in our little situation over here with this $100 million bank that's now worth 90 billion and is failing, we have to come up with $10 billion of additional cash to back up our bank, because the value of our assets are down to 80 billion from 100 billion, and we have cash calls coming in. We need to raise the cash. If we can't raise the cash, we're done for. Now, let's go back one step to Signature Bank in New York. Insiders of Signature Bank, New York, some of the top people, apparently sold over $100 million of personal stock of their own shares in the bank in the last years of this bank's existence. They took over $100 million off the table for themselves. Now, normally, when an insider like a bank insider and a group of bank insiders starts selling a bunch of stock, and this is a lot of paper, there's got to be alarm bells going off. I mean, insider trading reports are released all the time. We hear about Elon Musk selling stock to buy Twitter. We hear about Tim Cook selling his shares when he gets his stock options and he donates a bunch to charity. Whatever the reason, it doesn't matter what the reason is. We like to know what insiders are doing. Is Ryan Cohen buying more GameStop shares for himself? What did Ryan Cohen do with Bed Bath & Beyond? He dumped his stock and walked away. We know all about this. Insider trading is important. Disclosure of insider trading is really important. But surprise, surprise, these top three of these top insiders at Signature Valley apparently sold over $100 million of stock in their personal holdings just before the bank went under. when the bank was having trouble, because they didn't have trouble in 3 days like Silicon Valley had trouble. Silicon Valley had a run on its bank and it was under in 3 days. Signature has had issues for months and months. Crypto lending. Yeah. If you're in the crypto lending business, you've had problems for over a year. And the SEC coming down on crypto trading and crypto regulation. Signature Valley Bank has had issues with crypto for a long time. The insiders were selling while this is going on. Why don't we know about it? Nobody knew about it. There's no insider reports. I can't, you're not going to find any, because I'll tell you why. There are rules for bankers, and then there are rules for the rest of us. And under the SEC rules, you don't necessarily have to file insider trading reports as a banker. In this case, in the case of this particular bank, what these guys did was they had the bank on their behalf file insider reports that were filed with the FDIC, the Federal Deposit Insurance Corporation. And they filed forms with the FDIC that said that Mr. Schmo and Mr. Mo and Mr. whatever sold stock in the of the company, but it didn't disclose in detail whether the shares were sold back to the bank as a remuneration arrangement, or whether the shares were sold in the open market. But they were sold in the open market. They weren't sold to the bank. It's not unreasonable and unheard of for an organization to say to senior management, we'll allow you to sell X amount of dollars of stock to the company once a year at a negotiated price, and the company will buy those shares and cancel those shares. In other words, a stock buyback kind of a thing. It's not common, but it's not impossible. But if you don't clarify it, how would anyone ever know? And if these filings through the FDIC are so murky, which they are, and insider trackers, people who follow insiders as a living, they can't find out through filings through the SEC any of these guys selling any of their stock, because it's not filed through the SEC. The SEC, for whatever reason, either didn't know about it or gave them an exemption about it or something. There's something murky going on here where these guys can dump stock on unsuspecting investors and their bank is failing at the same time. The FDIC, whether they are powerless to change this rule or force them to, no, you can't file with us, you got to file over there, the SEC, I have no idea. Whether the FDIC doesn't give a crap, doesn't know about it, could be completely oblivious to it. And that could be the reality. The SEC had no idea. The FDIC had no idea that this was actually insider trading going on rather than internal stock arrangements. And the public certainly knew nothing. Investors in the open market buying and selling Signature Bank stock, clueless. You think lawsuits are coming? Oh, yeah, I think lawsuits are coming. In the meantime, today, Jamie Dimon comes out and blames the Fed and the Treasury for all the problems that the bankers are having. I'm thinking, really, pal? Your timing is kind of crappy. Really bad timing here. Jamie Dimon is a multi-billionaire guy now. He's a legend of Wall Street, and he's a great investment banker personality and reputation. Here's the reality, okay? Our friend Mr. Dimon and all the other top bankers in Wall Street have been around for decades, and all their number 2 and number 3 and number 4 people, all of these groups, we're talking the top 1 percentile in New York, all right, just as a general rule. And they're not just in New York, they're in London, they're in Tokyo, they're in Berlin or Frankfurt, they're in Milan, they're everywhere. But Jamie Dimon and his cohorts became much, much richer after the financial crisis because of how the government stepped in, quote unquote, to bail out the banks. And the way that these guys got richer is because they own a piss pot of stock in their companies, because they get huge stock rewards, which is typical of CEOs. And all their VPs and senior VPs, all of these folks, okay, I'm talking thousands of people here, not just one guy, but I'm, make an example of him. They've gotten themselves gazillions of shares of options for their bank as a form of economic incentive to make the company money. But how would you like to make money like this? How would you like it if I came to you and said, hi there, Mr. and Mrs. Bank CEO? I'm the Fed, and we're going to allow you to borrow money from the Federal Reserve, our so-called window over here, at zero interest, which is the case for almost a decade. You can borrow money for nothing. And you can borrow it for a month at a time, 3 months at a time. And what we'd like you to do with it, we'd really appreciate it if you would lend that money out to people who want to buy a house, buy a car, start a business, arrange a takeover of a company, payroll financing, whatever business turns you on, whatever you're into. And then whatever spread you can make, between zero cost and what you can get for the money by lending it is your overhead, money to your company, your bank. And if 80% of those dollars coming in are expenses to make the money, 20% left over, profit. But here's another little kicker. We're not going to tell you, we're not going to make you lend the money to anybody. We're going to leave it to your discretion because after all, you're bankers and we're not going to get in the middle of your business. And keep in mind that the head of the Fed at the time was the former CEO of Goldman Sachs, okay, Frank Paulson. So, we're talking Wall Street insiders that are now running the government organizations that allow these guys to do this business. So you, Mr. Banker, can borrow $10 billion for nothing. And you could theoretically just turn right around and buy $10 billion of U.S. Treasury notes that mature in 30 days. Now, how much interest are you going to make in 30 days? If the interest rate on a 1-year bond is 1.2%, in 30 days, you're going to get 1/12 of that, 0.1%. A tenth of a percentage point is how much interest you make in a month. That's 1/12 of a year. But if it doesn't cost you anything to get the money to make 1/10 of a percentage point, it's all pure profit. Because all you got to do is borrow it for free, buy this treasury note, hold it for 30 days. The treasury note comes back to you $10 billion plus 1/10 of 1% interest. You give the $10 billion back to the Fed and keep the 1/10 of 1% interest as a profit. How would you like to do that with trillions of dollars? Trillions of dollars. Collectively, all the banks are able to do them. This was the game that was being played right after the crash of 08-09. I'm simplifying it to the absolute slowest, simplest, plain English way, all right? But the bottom line was this. The top banks in the U.S. who had access to free cash were doing exactly this kind of work and were pocketing billions in profits, billions and billions in profits. And this allowed a lot of these outfits to bury other billions in dollars of losses and shore up their capital inside their organization. So the bank made billions of dollars doing these transactions, using money for nothing, lending it to people and organizations, using money from nothing and pulling in interest rates, and building up billions in equity and growing their equity base so that the depositors at a large institution with $1 trillion of deposits, the bank itself went from 50 billion capital to 100 billion in capital, or from 85 billion capital to 250 billion in capital. The capital was growing to back up the size of the deposits that they were carrying, which took the heat off the Federal Reserve to worry about these guys failing. Too big to fail. Okay, that's what we're talking about. Unfortunately, Silicon Valley was not too big to fail, and same with Signature. They failed, but they didn't fail the depositors because the government, yet again, bailed out the depositors. It's not the depositors' fault that a bank went under. The depositor depositing $20 million of their company money into a bank to use it as the place to put their cash, they're not the risk taker. It's the bankers who are the risk takers. And these guys, many of them are gambling much too much with depositors' money. And JB Dimon wants to reduce the amount of regulation on top of these banks, because he was one of the guys who was with one of the largest outfits in the world that was being restricted as to what they can do with this extra cash. He wants to have free reign to go anywhere he wants with it. Here's another problem that's coming to the surface. Okay, don't forget, JP Dimon made a lot of money as his stock went up in value because of all those options he got at those low prices. Because these CEOs get options at the lowest price of the year, and then it's all good. Here's the next problem that we're dealing with right now, and this is now just starting to show up in news stories. You're just beginning to hear it. The last month, you started hearing about office towers having problems with vacancy rates, and office commercial real estate values have been dropping. These are mortgaged properties. These are heavily mortgaged, mortgaged at 70, 80% easily mortgaged. But there are secondary places you can go for additional financing. You might find that Bank of America will let you borrow 70% of an office tower, an appraised value of an office tower. But if you go to another private bank, private lender that pools money together from investors, you might be able to get 90% financing for that same building. And if you are a gambler type developer and you've got 4 office towers and you want to build another one, or you're acquiring land or you're making a deal and you need cash, you'll leverage your properties up to 90, 95%. You'll leverage as high as people will let you leverage to then get enough cash to make the next deal. And in a slowing economy and in a rising interest rate environment, you are scrambling to raise cash. The problem is that the investors who put money up to invest in these properties 2 years ago were getting interest rates of 2.5%, 3.5% when the interest rates are nothing. Today, 6, 7% interest rates, these guys are upside down on their money. That office tower isn't as worth as much anymore. It's gone down in value. It's depreciated. And the mortgage against it is higher in percentage terms. In some cases, there's probably 110% mortgage on a 100% value building, upside down. The bondholders have to decide whether or not to foreclose on that thing, or are they getting paid their interest in principal. If they're getting their money, they're not going to foreclose. The reality, though, is that these mortgages and these deals are all eventually packaged up inside huge packaged loans and are marketed by Wall Street to investors, just like back in the Big Short days, these gigantic credit default swaps. And you can buy these mortgage-backed securities, these mortgage-backed bonds, AAA rated, on commercial real estate. And there's a whole bunch of trillions of dollars in commercial real estate out there that are held by the banks on behalf of their depositors. And here we go. There's another problem now surfacing just this week, and that is the apartment building problem. There's an apartment building problem. It seems that rents were going up in the last 3 years. How many times have we talked about it? You've heard about it from friends, relatives, associates, maybe your own lives. The rent keeps going up in your building, in the townhome you're in, or whatever. You know someone that's in an apartment in downtown, wherever, and they got a 20% increase in rent. The rents just went sky high crazy as real estate went crazy during COVID. And a lot of people were protected from getting kicked out by the Biden administration with regard to rental control, to not allow landlords to kick people out. Well, those protections have ended. Congress wouldn't extend it. Senate can't do it. And so guess what? Rents are skyrocketing for people, and people are moving out. But they went too high, too far, too fast. And now, all of a sudden, in the last few months, it's become apparent that a bunch of apartment buildings have vacancies and prices are dropping in certain regions of the country. It's not across the board, but it's beginning to show. The same business in financing office towers and business campuses and shopping malls, the same business is applied to townhome developments, apartment block construction. It's all another form of commercial real estate. It's just another arm of it. These bonds are now under pressure, and these bonds are held by, you guessed it, a whole bunch of the banks. I told you 6 months ago, the beginnings, I began to mention it, how certain pension funds and certain investors were putting in requests for cash withdrawals from real estate investment trusts, these REITs, these ETFs, these privately run ETFs that are commercial real estate ETFs. And the folks who run those ETFs are sitting on bonds of all kinds of commercial property. I mean, just all over the place. And they can't liquidate you as fast as you want out. They were getting cash requests for millions of dollars from investors because they had problems with other investments and they couldn't get cash out. They would restrict it on how much they could get. The reason is simple. The bond market of these properties is slumping with higher rates. The higher the rates go, the lower these bonds are worth. And these aren't 3-month notes, 6-month notes. We're talking 5, 10, 20-year mortgages, 30-year commercial mortgages. This is standard stuff. How many folks have a mortgage for their house for 20 years? Standard stuff. The bonds that represent 20-year mortgages, 30-year mortgages are way down in value because the rates have gone up. When these bonds were created, there were no interest rates to worry about. There's no liquidity. And this is bad news for banks. Now, banks can carry their investments at book cost. They're allowed to do it, even though it's not worth that amount of money. They're allowed to quote it at what they paid for, especially U.S. Treasuries. But when it comes to a cash withdrawal run on the bank, and any bank needs to sell just 1% of their portfolio, you want to sell 1% of the bonds you have, you now have to mark down all of it at the same time because you can't have two sets of books carrying at the same time. You either carry this to maturity or you don't. Now, these bonds, again, they pay interest on a monthly basis, quarterly basis, annual basis. So banks are collecting money all the time from their bond holdings. They're getting money. That's not the issue. The problem is the amount of money they're getting is 1%, 1.25%, 2%, 1.75%. These were cheap loans when money was cheap. The banks borrowed for nothing or took your savings account money. They were offering you what, 0.1% interest, 0.25% interest on your savings account. They were taking that money and lending it out at 1.5%, 2.5% to these bond syndicates and making the difference on trillions of dollars collectively, trillions. And all of a sudden, trillions of dollars in bonds are worth hundreds of billions less in actual value. They're not liquid, and they're not easily turned into cash, and they're worth a lot less than they were issued at. They're worth less than government bonds because they depreciated even more than government bonds. This is the hidden secret of the U.S. bank business. This is the underlying belly of weakness here. And it's only a matter of time before someone larger potentially has a cash run. Or it starts with 4 or 5 small banks at the same time that get a run on their depositors. Because if we have a slowdown in the U.S. economy, people are going to want their cash to pay their bills because they're not going to have enough cash flow coming in the front door to handle bills. So they're going to use their savings. They're going to use cash that they've stored in banks to make ends meet until the economy turns around again. The problem here is that if you have too many institutions that are suffering cash withdrawals quicker than they can liquidate assets into cash, or when they do liquidate assets into cash to handle withdrawals, they have to write down the value of their banks. They may find that they've written their banks down so low that all the capital in the bank has been used up to cover the shortfall, and there's no protection. There is no equity anymore. The bank is technically insolvent. It owes its creditors, depositors, more money than it's worth, depending on what they did with this money. And Mr. Diamond wants this relaxed. He wants banks to be given free rein to do whatever basically they bloody well want to do. That works for him because he's one of the top 4 or 5 banks in the world. Doesn't work for all the others. And Timing couldn't be worse for this guy. Just couldn't be worse for this guy. But what can I say? When insiders can sell stock and not report it, and insiders can flog paper for years, and the public doesn't know that insiders of these institutions have already got out. They're already out. And now the public is finding out that they got out a year and a half ago, and they're just sitting there with 1/10 of the stock they used to have, and they're still drawing these massive salaries and benefits and perks to make it appear like all is well. All is well. No problem here. Everything's fine. Everything here is just fine. We still have our corporate tent at the so-and-so PGA event in our hometown, and we still have back up a whole bunch of small little baseball teams with the kids' jerseys and our bank logo on it. Everything's fine. Everything. We didn't lay off anyone in our marketing department. Everything is fine. But the reality is, we're finding out now that it seems that some insiders have been getting the hell out of Dodge before Dodge blows up. And I'm sitting here in the Canadian that I am. I'm the Canadian looking in on this going, these articles coming out from various financial publications do not paint a very pretty picture of what's going on out there. There seems to be some scary leverage going on. I've seen this movie before, though. I know this movie. Steve Carell was in it. And all these other guys that I recognize. I've seen this movie before with this meltdown of the U.S. housing market. The private housing market was the problem at that time. Today, the problem is not the private housing market necessarily, because we already know the private housing market is on its knees. Price declines for 7 months in a row, lower sales for a year in a row, mortgage rates of 6.75% to 7%. We already know that. No, that's not the problem. Because private homeowners who've been trying to get a mortgage the last 10 years, how difficult has it been to try to get a mortgage since 2010 on a house? It's been near impossible. You've had to have equity. The paperwork is a mile long. It takes for bloody ever to get a mortgage done. Commercial real estate, wide open. Apartment building financing, condo construction, townhouse construction, wide open. Commercial campuses on the edge of town, 15 buildings going up for this corporation. Oh, the land is mortgageable. The buildings are mortgageable. No problem. Investment money is everywhere. How much money was desperately looking for a place to go in the last 10 years for any kind of yield or return? I mean, really, how many trillions of dollars did people have? They were trying to get a return on their money because they couldn't get anything from their savings account. They couldn't get any money from corporations on fat dividends. That was almost impossible to find. They were looking for a home. So they were chasing stock market gains. We had record highs on the Dow for 10 years. No matter who the president was, it didn't matter who the president was. Markets went up anyway, because people were desperate for a return. And then COVID shows up. People are told to stay home. Here's $2,000 in cash. In Canada, it's $2,000 a month per adult. Here's money for you. What are people doing with it? They're investing it in the market. They're saving it at their bank. They're paying off their credit card loans. Now, the credit card companies have got these billions of dollars coming in and people not spending any. They got a problem. They got cash. We have to return money. We have to get money on this money. We used to get 18%, 20% interest from our SAPs, credit card holders that wouldn't pay on time. Now we have these billions of dollars coming in. We got to get money on this money. We got to diversify. And they started buying up other assets to bring cash in. There was cash looking for a place to go for years. Seemed like decades. That all stopped because the Fed stopped buying bonds from everybody. And now we have tightening going on. And the tightening has now come right down to the retail level at bank branches. Right down to bank branches, there's now retail tightening right there at the teller window. And this is bad news. This is the underlying nightmare that the Fed and the Treasury do not want to have happen, because this affects individual people. Doesn't affect the top 50 companies. This affects individual people who are voters. This is not good whatsoever. Welcome to the party, pal. This is where we're at right now. The Dow's up 32 today. Oblivious. The markets are oblivious. Oil is up 84 cents, completely ignoring reality. We have an economy here that is teetering, possibility of a pullback. Oil should be $50 a barrel, looking into the future, but it's not. It's looking into today, looking into the latest comment from some analysts out there who says oil is going to go to $101 a barrel. That's where it's going. And there are people who are gullible enough to believe it and are buying the futures in oil. Someone is selling these futures. Someone is selling. Someone's smart enough. The markets are 33,800 for the Dow. We were at 28,000 back in October. In October, the lows were 28,000 for the Dow. We're at 33, 5,000 point gain. The high since last October, I think it got to 33, 34.6 or 34.4. So we're 500, 600, 700 points away from another higher level since the drop off. And the economic potential just isn't there. We have a war in Ukraine. That's not good for business. It's good for some business, yes, not all business. No, a lot of consumers in Ukraine are not buying consumer goods, and a lot of future consumers are dead. They died in the war, and so a lot of young men not going back to Russia who are not going to buy cars. I'm not going to buy TVs. I'm not going to buy Sony gaming systems and clothing and have kids and grow the economy over there. Okay. Does it mean anything to Americans? Maybe not. Americans don't give a crap whatever happens in Russia. Fair enough. But it's part of the world economy. And the Ukrainians aren't in part of it. The Russians aren't part of it. And more of the economy of Europe is being consumed with a war going on. This is not good for business, not good for China. They are having trouble exporting goods to Europe in bulk like before. And Europeans are finding the Chinese aren't buying their goods either because the Chinese aren't selling goods. If you can't sell, you can't buy. It's one of those things. In the United States, it's a one-way street. 90% of the trade between China and the United States is Chinese good going to America and only 10% going to China. So America cuts back 10% of its buying from China. That's a big deal to China. China cuts back 10% of its sales to America. America goes whoop-de-doo. It's 10-to-1 imbalance. This is a nothing burger for us. It's true. That is true. America is sheltered in a way. But the economy continues to move forward, and it's a world economy, and we got a problem. By the way, AMC, did you notice AMC? The shares are off. We heard this morning that there's been a settlement made, I guess. The group that was suing AMC because AMC wanted to merge the preferred shares and the common shares into one security and then do a 10-for-1 reverse stock split and then issue a bunch of stock from the treasury to raise a bunch of money. In other words, complete and total annihilation of common shareholder equity is about to take place. The common shares are down $1.23 this morning to $3.88. And the preferred shares have gone up 25 cents to 173. Now, these two are going to eventually be worth just as much money to each other. So it might mean another 90-cent drop for AMC down and a 90-cent gain for the prefs going up. Might. And then they'll be at the same price, $2 and maybe around $2.90. And then they'll do a 10-for-1 reverse stock split, and it'll be $29. And then the stock will go to like $15 to $18 a share, and they'll try to do a $15 financing to raise some money. In other words, they're going to try to raise money for the treasury at at 15 cents a share is what they're going to try and do. I mean, this is how you do the math. Okay, it's trading at $3.80, the common stock. It's going to be rolled back 10-for-1 in value on a stock split. So it's just going to be a wipeout. It's $1.50 a share. They're going to try to raise money at $1.50 a share, and I don't know if they can do it. I don't know, because they need $5 billion something dollars to pay off the bankers. It's bad. It's the worst. This is supposed to hold GameStop down today, by the way, because people think, well, GameStop and AMC do exactly the same thing all the time. They're exactly the same. Meme investors, after all. GameStop's off 7 cents. 7 cents. That's what GameStop is down right now. AMC is down a whole lot more than that. So not quite the same thing. AMC common shares are down 24% in the pre-market at 397. Tesla is off 2/3 of 1%, down 9 cents a share. That's what's going on over there. Other than that, we'll see what happens here. We seem to have a bit of green showing here and there. Goldman Sachs is off 50 cents. We got a Google off 15 cents. Amazon's up 64. Nvidia's up 7. Unity's up 14 cents. HBQ's up 3 cents. Pfizer up a penny. Microsoft up 32. I mean, yeah, there's not a lot going on here. 182 gain on Tesla after a 1269 drop yesterday. These are nothing burger, dead cat bounce moves, if that's what this is. Yeah, we'll figure this out as the morning goes on. If you're an option writer, oh gosh, times are good. Times are great. You make money doing nothing. I mean, literally, you don't have to do anything. You write calls on GameStop out to September, October, and haul in $350 to $450 a contract, depending on which one you write. You can write $25 contracts on GameStop. $25 contracts, and I bet you can haul in $4 or more in premiums if you write like a September, October call for nothing, for doing nothing. You're offering your stock for $29 a share. This stuff was trading at $16 a share 3 weeks ago. Remember that? Do you remember? $16 a share. Multiply that by 4 to get the pre-split number in your head. $64 a share. GameStop was $64 a share 3 weeks ago. This is unthinkable a year ago when it was $150. You remember those days? $120 to $150 to $200. It would always shimmy around there. Now we're getting all excited if you can get 29. 25 plus a $4 premium. That's $29 a share. That's not even $120. It's $116 a share. I'm getting excited about that. That's how much the world has shifted in less than a year. But that's the reality of this market. Now, those of you who've been writing calls since last year, I know viewers on this channel who are writing $200 contracts, 210s, 220s, 250s. A ton of you were writing 180s, 160s, 170s, 150s, 140s. I remember when the stock dipped into the 90 range and then jumped up after Cohen bought in and went all the way up to 200. You guys were doing rollovers from 120s to 140s to 160s to, oh my God, it was crazy. We're at $23 a share right now. You guys made so much money on your calls, allowing you to blow your calls out by deep in the money calls and leverage up the number of contracts that you write now, representing how many shares you're writing against, is phenomenal compared to where you were a year ago, a year and a half ago. There were people on this channel who were holding 100 shares of GameStop, 200 GameStop, 300 GameStop. We're writing 2-3 contracts at a time, and we're just fretting about their future. And today, there are people here with 20, 30, 60, 80 deep in the money calls. And they're doing very well, thank you very much. And they're writing some real nice contracts. Look, if you're hauling in $4 for a $25 contract, that's $16 that you're hauling in on a $100 stock. Remember, this stock split 4-to-1. So you're going to write a $25 call. That's like writing a $100 call. And they're handing you $16 for that. That is good money. You take that money in a bear market. That is very good money. And you did not pay $23 a share. You're buying deep in the money calls for maybe half of this amount of money, and you're hauling in that kind of cash. Lovely return on your capital. Very nice. You're not getting that from your savings account anywhere, I can tell you that. Exciting stuff, everybody. Welcome to the party, pal. Those of you who are aware of how the option writing game works, I congratulate you. You have done your homework. You have taken my classes. You've been involved with my classes. I know a bunch of you are going to be with me this Saturday, 2 o'clock Eastern time, for class number 15, Deep in the Money, Poor Man Covered Call, Advanced Option Trading Techniques. We are going to get into some stuff here because you've got to learn more. how this game works to make it even more effective for your bottom line. How many of you have quit your day jobs in the last year? It's incredible. The changes for some of you folks have been profound with regards to the economics of your household. I congratulate all of you that you've done as well as you've done and have been able to score some really nice gains. And it's just going to keep coming because this bear market has topped out. I just do not see where this bear market goes anywhere from here. Be lucky to hang around, but every minute of every day things change. That's just the way it is, and that's the way it goes. Thank you, all of you, for already hitting the thumbs up numbers for us. Credit Savage at 100, Splayer 101, Christina number 102, Nazareth 98. Thank you all for these thumbs ups without even me asking. I appreciate this so much. We try to hit 200 every show, and if you can hit that thumbs up button for us, thank you very, very much. I appreciate it. All right. What's going on? David Flores says, Uncle Bruce, did you cover the huge IBM win last week regarding the Canadian Chips Act backed by Trudeau Biden? Seems like a big deal. Reason IBM popped on the announcement. I didn't cover it. I know the chip deal was signed by Biden as part of his package a year ago, and it passed because Pelosi was still running the Congress and they were still passing bills back then. And so that got done. I also know about the huge infrastructure bill that got passed, and so the benefits coming to Americans will be years and years and years in the making now because that can't be reversed. But no, I didn't cover this particular part of the story, but this was obviously a deal that was negotiated between the governments. And the thing is that Biden can't go in front of cameras in Washington in the White House and brag about, I just made a deal with the Prime Minister of Canada to do this chip deal, because the U.S. media will be all over him about selling out Americans to Canadians. It's a no-win. The best move that the U.S. can make for its economy is to bring Canada along with it, and vice versa, because the two countries are the two largest trading partners on the planet in dollars. I think it's $5 billion a day crosses the border every day. $5 billion in goods. The number of jobs that the two countries generate for each other is unfathomably huge. It's massive, and it's an undefended border. And there aren't 2 million Canadians dying to get into the United States, and there aren't 2 million Americans dying to get into Canada. They both have jobs on both sides of the border. They both have pensions. They both have their heritage. They both have a middle-class-ish lifestyle, but there are poor Canadians and poor Americans and rich Canadians and rich Americans. We got it all. We all have it all, but the relationship of a $5 billion a day trading partnership is a good one to have. And you negotiate these deals out of the spotlight. You make the thing work, and then you get to work. And forget the press. And forget the right-wing media, the left-wing media, forget the interest groups and this, just get the deal done. And that's what was going on, obviously. A lot of stuff was negotiated between Biden and Trudeau months ago and ironed out in the last year, so that when Biden arrived in Ottawa, it was all done. It's just for show now. We're just here to shake each other's hands and smile. And Biden made a speech to the parliament. It was all pre-scripted, all pre-figured out. And everything is fine now, and we move on, and that's the deal. That is sometimes the best way to do it, rather than be confrontational and or fly out of Canada and call him a backstabber from the Air Force One aircraft. What happened 3-4 years ago? Not too polite, but we know who did it, and we understand it is what it is. Anyway, there you go. We're here, we're alive, and we're moving forward. We're opening in 6 minutes, and it'll be another, of course, interesting day to say the least. We have a lot to watch here. The Dow is about to go red. We're on the very edge of holding on to a gain at the moment. We'll figure out how all that works out. Thank you, all of you who are here today, joining me this morning. It is so appreciated. Thank you for your kind words and your support of this channel. Especially those of you who have become subscribers of this channel. I thank you. Those of you who have become members of this channel, that is the ultimate compliment to make to us. Jennifer and I are so appreciative of all of you who are members of this channel. It means the world to us. We thank you so very much. It tells us to just keep on going, just keep on going. And it is a wonderful thing. 118 thumbs ups, by the way, already. Beautiful stuff. We've just shifted our comments now to member-only commentary. Again, thank you all. Those of you who have become members, those of you who are renewing your memberships when asked by YouTube, do you want to renew for another month with this guy? Those of you who are moving up from a regular member to this level right here, gold bagel level members, you guys are the creme de la creme of this channel. I'm honored that you're with us. And Wednesday nights, tomorrow, 8 o'clock Eastern, Gold Bagel Member Show, prime time with Uncle Bruce, 8 o'clock Eastern time tomorrow night. This Saturday, class number 15. If you're interested in learning how to make money in the options market, how to write options, in particular, the Poor Man Covered Call option program, that is what we're going to be talking about here in depth on Saturday. We're going into all kinds of other nuances of it, and I'm going to cover a few other angles. This is an area that has absolutely transformed people's accounts in the last 6 months. People here used to write options just on stock. Then I began to introduce the Poor Man Covered Call strategy to you folks about 6, 8, 9 months ago, and it has really taken over this channel. There are folks here who now realize that they can quit their day jobs even if they have $50,000, $60,000 of capital available. They now know they can actually quit their day jobs with that much capital under admin. It was unthinkable 5 years ago that anyone would even consider leaving their day job unless they had $1 million in assets. $500,000 was kind of risky years ago. Today, with online trading being done on this, with the ability to write Poor Man Covered Calls in nanoseconds, you can sit down on the toilet and write contracts and make yourself a nice buck. You do not need to be stuck in some cubicle somewhere or in a warehouse somewhere or in the burbs somewhere at some campus dying to get out of your job. You do not have to travel on airplanes for your boss anymore. You don't have to do road trips. You are now looking after your own assets, and you're doing it as a full-time paying gig. This is a life changer, and I welcome all of you to the channel. If you'd like to be part of the class, get off your duffs and register immediately to get yourself a seat. It's limited numbers of seats available. If you want to get into the class, make a donation to this PayPal address here. It's down below in the description. It's $150 US that gets you into the class, which is 2 o'clock this Saturday Eastern time. 2 o'clock Eastern time this Saturday. It'll last about 2 hours. After the class is over, you will receive in the next week an edited version of the class that will eventually be uploaded to my website. Those of you who cannot make the class, you'll be able to acquire your copy of the class for $150 about 4, 5, 6 days after. But those of you who've been in the class, you get to be in the class live when Auntie Jen is the moderator, and you get a copy of the finished version of the class as a bonus. And so thank you, all of you out there who have already registered. Once you send a donation to the class, send me an email right here telling me, Bruce, I just sent you $150 to get in the class. Please send the link to the class to my email address right here. And that's what I need you to do. You have to send me an email so I now know where to send the link to get you in, because it's a private broadcast on Saturday. It'll be just like this here. I'll be on this screen right here with a whiteboard behind me, which is right there. That's the back of it there. And you will be sending me questions just like you comment to me right now, just by typing in comments. You'll be able to make questions as we are flying along. Jen will interrupt me, as she always does. She'll say, got a question for you. Here's a good one. And we'll address your questions as I continue on the lesson. All right, everybody. I look forward to seeing you this Saturday. A bunch of you have already registered. You're already in to win. Can't wait to get this going. And again, thank you, all of you who have been so loyal to this channel as class watchers. Those of you who have been looking for me for one-on-one consultations, been enjoying those as always. If you'd like to have a one-on-one consultation, let me know. I can do one every day, Monday to Friday. We can do consultations at easily at 1, 2, 3 in the afternoon, and also Sundays we do consultations at 10 in the morning Eastern time, noon Eastern, and 2 in the afternoon Eastern time to help you get through your questions. Larry Titus has done the ultimate favor for us. He has rung the bell, and we are open for business. The markets are going. Thank you, Larry, from Christina DQ. Thanks, Larry. We're running, we're trading, and let's see what's going on here with this market. We have got all kinds of stuff on the surface, and we've got stuff below the surface that we have got to keep an eye on here. And I am wondering just how ugly is going to get. I'm curious about that. Well, we'll do the best we can with what little we have, kids. That's all I can say. I've got the Dow, I think, down 23 points to start the session. And we'll just see where this all works out. Unbelievable. Uncle Bruce, if you have 5,000 dry powder, would you scoop up SoFi right now? I think that is the best value out there. Love the SoFi. Love the SoFi story. Love the SoFi growth. God, I love their prospects. They're just going to do so well. It's unbelievable. Everything is falling in their lap. Regional banks having issues, insiders selling out, and Noto is buying. It's unbelievable. I mean, the CEO of SoFi is filing insider reports with the SEC that he is buying the stock. How opposite is that? The Wall Street darling bank stocks, which Silicon Valley, but particular Signature Bank was a Wall Street darling bank stock, and the insiders dumped $100 million worth of stock in its last year and a half of existence to get the hell out. What more do you need to know? What more do you need to be handed to you as evidence that SoFi is real and these other outfits are? I can't trust them. Can you trust them? I can't trust any of the other banks out there. First Republic Bank, the other bank that doesn't file insider trading reports, these guys are to be believed and trusted. That stock's $14.14. It's down 47 cents this morning on the fallout of this story that made the Wall Street Journal today. I don't know why that stock isn't $1 a share. I can't trust these guys. They're dumping their stock while everyone else is getting sucked in by Wall Street analysts. And this is the thing. How many Wall Street analysts wrote up Signature Bank as the greatest investment of all time for the last 2-3 years? These guys didn't know. They didn't know, even when they were promoting the stock, probably urged by their backers on Wall Street, promoting the stock while the insiders were getting out. Unbelievable. Unforgivable. There's no street cred there. There's no cred whatsoever. Do you see a banking investigation going on with the Senate? Do you see the Congress being called in? When GameStop shareholders were making money, and they, their stock went up to $200-300 a share, the Congress called a session right now to haul in on the carpet these retail investors that had the gall to try to make money in the market. I mean, this is the purview of the Wall Street boys. What are you doing thinking you're here to make money? Oh, no. You don't support our political re-election campaign. They do. They're funding the super PACs. No. You guys are we're hauling you in. And the lead example of investors was Roaring Kitty. They brought in Roaring Kitty as an example of the kind of retail investor that you are. That is what Wall Street thinks of you. Not Wall Street. Well, Wall Street to a degree, but Congress. Congress thinks that all of you are roaring kitties. That's what they think of you. Unbelievable. And the only person to give honest answers to the Congress was Roaring Kitty, because they asked him, yes or no answer, please. Are you going to buy more GameStop shares? Answer, yes. Next question. It's a yes or no question. I gave it the answer. Now, they couldn't believe it. They didn't have another question ready. They thought they were going to get a 5-minute speech about how lovely that you asked me, and thank you for allowing me into this country from Romania and all this crap. Unbelievable. Yeah, I'd buy SoFi. That'd be one I'd like to get. Yeah, Drew, I'm 1, 2, 3 on the thumbs up meter. Thank you, Bruce. Thank you. Rock on, says Blair. Christina, I could get about 800 shares, but with banks being news badly, the things is when people sell, I'd be buying. Brian, we got Brent coming right on. Brent, 50% SoFi, 50% GameStop, says Brian. Richard, there's no cred, just crud. What else going on here? Splair, someone here knows the BMO Harris Bank. Is the money there safe? They're at least connected with First Trade. Yeah, they're owned by Bank of Montreal out of Canada, so you're safe. Yeah, they're okay. When I was a boy in Bulgaria, yes. Oh boy, JR, the Chris Savage watched The Big Short myself after Uncle Bruce talked about it so much. Scary. I gotta watch Margin Call now. My hair may turn more gray when I'm done. Oh yeah, unbelievable. Yeah, The Big Short was a good movie. It really was a very well done movie about the housing crisis. It really brought it right down to the street level. I mean, they literally had the characters, these characters who were investigating this crash of the real estate market. They went to empty houses in Florida. They saw derelict houses in California. I mean, they were down to the street. They realized everyone wants to sell, nobody wants to buy, and people are upside down. And even strippers were holding 5 properties at the same time, and they were getting teaser loan rates. And then there were mortgage brokers bragging about no income, no job, ninja loans, no income, no job applications for $500,000 mortgages. Approved. It was so irresponsible. It was in effect theft. And at the end of the day, the American taxpayer paid it. That's who paid the price. And the bankers got richer and richer, and they were able to offload all their deadbeat loans that they had packaged. They were able to offload them all for 100 cents on the dollar. It was the biggest corporate bailout in U.S. history, and the American taxpayer got screwed royally on it. It was unbelievable. Anyway, there you go. So much fun. What's going on here, Brian? Everything Uncle Bruce is saying needs to change, and there is a group trying to change things with the SEC. I hope they might succeed. Everyone should visit the Investors Start Voting. Alex, number 128 afternoon, everybody. Today's a good day for folding my arms. Credit Savage. Oh, hell no. Strippers and pile dancers holding 5 or 6 properties at a time. Why? That's unacceptable. There you go. We're up 18 on the Dow. We are trying to hold any kind of gains here. This market, 22.97 on GameStop, down 20 cents. We're up 5 on S&P, 11 on NASDAQ. Oil's up $1 a barrel at the moment. Cyxtera is 31.1 cents, down 0.6. ATIP is unchanged. SoFi unchanged. Tesla up 350 to 198. Apple down 4 cents. We've got Unity up 17 cents to 32.34. HPQ down 3 cents. First Republic down 67 to 13.93. Google up 71 cents. Moderna down 123. Cisco up a dime. Pfizer down a penny. IBM down a dime. Microsoft down 42. 23andMe is up a penny. Matterport down 3 cents. Rocket Lab down 8 cents. Unbelievably down 8 cents. It just blows my mind. Smart Rent down 3. Spire is up 1.5. Amazon is up 53 cents. Home Depot up $1. Netflix down 150. Adobe up 143. Goldman down 222. AMC, the common shares are down 86. The preferreds are up 20. 424 versus 168. Royal Caribbean down 18 cents. We've got a Target up 12, JP Morgan down 47, Costco up 30 cents, Walmart down 20 cents, Disney up 34, Nvidia down 345, American Airlines is at 14.45, up 3 cents. That's the story right there. What else? So we're down 14 on the Dow as we speak now. We're negative on the Dow. We're negative on NASDAQ. a point on the downside, 14-point downside for the Dow, and we have a 1-point gain on the S&P. So the markets are giving up losses in just 10 minutes. We've already turned red. We're overbought on the market as a whole, and there really should be a down day coming here. The question is who and how far and how fast, and that's the story. As I see it, welcome everybody to the party. Nice to have you here. And let's see. BP says AMC is halted. It's being attacked. Mirko 131. BP says down 87 cents. Nathaniel, Uncle was interested to hear your thoughts on other countries, including China, Russia, and the UK deciding to build financial systems to bypass the dollar. It's a nothing burger story. It's just fantasy in its highest form. Don't waste your time investigating it too much. It's just pointless. Chris Savage, oh lovely, my AISQ, Roblex, and Unity cover calls are beautiful, just beautiful. I hope you guys rolled over. It's a beautiful thing. BP, something is really trying to drive AMC down today. Yeah, the reality about AMC is simple. AMC and the preferred shares are going to become the same equity. So what's going to happen here is the commons are going to drop and the prefs are going to rise, and they're going to meet somewhere around $2.75 to $3 a share. They're going to meet there. Then they're going to do a 10-for-1 rollback. So the shares will be turned into $30 stock, and 1/10 of the shares will exist. So you're going to go from 1.1 billion shares to 110 million shares. Then the company, AMC, is going to desperately try to issue new stock, common stock, at the best price they can get to knock off some of that debt. The problem is that by the time this merger is completed and the reverse split is done, these shares will be $10 to $12 a piece. And the company is going to try to issue stock between, they're hoping 15 to 20 bucks. I think they're getting between $8 and $10 a share, which is 80 cents to $1 right now at best. And they're going to have to liquidate another so many hundred millions of shares. And that means the shareholders today of AMC will own maybe 12% of the company, 15% of the company. There'll be a nothing burger group of investors. That's the future of AMC shareholders right now. That is where it's at. And why they're in here, I don't know. Nathaniel, yes, I read that Saudis are doing that to bypass the US dollar. We're going red, says JR. Savage, wait, Uncle Bruce, do you mean we're not in a bull market yet? What? McDonald's cutting jobs, even corporate ones. Real estate having an uptick first 8 months. And gas, FUD, that's not a good thing, huh? There you go. Not a good thing. We're down 20 on the Dow. 24 now. We're down 2 on S&P, down 16 on NASDAQ. Oil up 86 cents. And that's the story. So where we're at, CYXT, Cyxtera, is down 0.6 of a penny. GameStop down 28 cents. HIP down 0.3 of a penny. SoFi down 6 at 5.98. Tesla 195.09, only up 32 cents now. Apple down 52. Unity down a penny. HPQ down 11. First Republic 13.98, down 62 cents. Google up 2 pennies. Moderna down 1.22. Cisco up a nickel. Pfizer up a penny. IBM down 11. Microsoft up 1 penny, ME up 1.5 cents. Matterport down 4.9 cents. Rocket Lab down 6 cents. SmartRent down 4. Spire down a penny. Bed Bath Beyond down 1.7 cents. So Bed Bath Beyond is 36.7 cents for Bed Bath and Beyond. The stock was $30 a share when Ryan Cohen was a shareholder of that company and had suggestions. He brought his suggestions to the board. Here's what I think you should do. They said, no, we'll go to our Wall Street pals. We can do it better ourselves. He said, oh, okay, fair enough. By the time he got out, it was $16 to $18 a share. How many would you like at 36.5 cents? How many would you like? How many? How many? Would you like them cheaper? Don't worry. They're coming to you. Bed Bath Beyond is coming to a town near you. Unbelievable. More store closures. It's in trouble. There you go. I'm in a bull blank market, says DQ. Brian, Lavalo, Chris Savage, fold my arms. JRDQ, smiling and laughing. Giddy up, everybody. Option writers, do not fear the upside. Enjoy the shrinkage. It's coming your way. Enjoy a dip. Dip is under construction right now. Cyxtera is up 1/10 of a penny, 31.8 cents. It's going hard. GameStop, 22.80, down 37 cents. SoFi down 7, Tesla down 66, is red now. Tesla just went red. Apple down 59 cents. There you go. Do not fear the upside. All right. Breaking story. I love these headlines. S&P tries for the longest winning streak since 2021. I have bad news for the winning streak. Really, really bad news. Unbelievable. So ridiculous. Okay, what was this story here? I just saw something break. See if I can find this story. Get that up there. And where is it? Here we go. Huh. This should be fun. AMC's ape conversion settlement could lead to, quote, potentially massive, unquote, $16 billion equity raise, says analyst. Really? Stock conversion is part of AMC's ongoing battle to eliminate debt. Here's the story from some guy named, what's his name? I don't even have the name of the writer. Oh, this is fun. By Anonymous. AMC's ape conversion settlement paves the way for a huge equity raise that could bring in as much as $16 billion, according to B. Riley securities analyst Eric Wold. The settlement, which was revealed in a filing Monday, opens the way for AMC Entertainment, their proposed conversion of AMC preferred equity units, APE, or APEs, into common stock alongside a 10-for-1 reverse stock split and the capacity to sell more shares. The move, which is part of the company's ongoing battle to eliminate debt, has faced court proceedings. Wold said that the settlement clears the decks for a potentially massive equity raise should the conversion of APE units to AMC common shares be permitted to proceed, along with the increase in authorized common shares and a 1-for-10 reverse stock split. We continue to see a positive path for the company to raise significant amounts of capital, he wrote in a note released Tuesday. And at the recent trading price of AMC shares, accounting for the aftermarket performance on Monday, this would indicate the potential for as much as a $16 billion in equity to be raised by the company, Wold added. AMC's stock plummeted 23.7% before opening on Tuesday, while the APEs rose 16.9%. AMC shares ended Monday up 2%. The APEs ended the session at 0.7%. The movie theater's total aggregate principal debt was $4.9 billion at the end of 2022, down from $5.2 billion at the end of 2021. Last month, AMC shareholders voted in support of a company's proposal to convert AMC preferred equity units into shares of common stock in what the company's CEO Adam Aron described as a landslide victory. Although we had felt it would be difficult for the judge to rule against the validity of this vote, given the overwhelming support of the stockholders, this now seems to be a moot point with the binding settlement announcement, Wold wrote. While we maintain our neutral rating and a 450 target until final approval is granted and the conversion occurs, we still expect the prices of APEs and AMC shares to converge. AMC describes itself as the largest movie theater in the world with approximately 950 theaters and 10,500 screens across the world. Unbelievable. This is fantasy land in Technicolor. I mean, wow, this is whoa, 60. I just can't fathom this stupidity. Why on earth would any person, any institution, any investor with any sense want to invest in AMC after a 10-for-1 stock split? You're going to have hundreds of thousands of pissed off shareholders who've just got their equity wiped out. You're going to do a 10-for-1 rollback, so that's going to take maybe a $3 stock and turn it into a $30 stock, and then you're going to watch that go down to $10 in like 30 days, if that. It might take a week. And then they're going to try to raise money at $10 a share to pay off $5 billion in debt. That means they got to issue 500 million shares. If they find a buyer, if they find a buyer with $5 billion to buy into AMC, there'll be 500 million shares issued. There'll be 100 million at least outstanding. There'll be 600 million shares outstanding, and the meme investors have 100 million of them at best. I don't know why would anyone do that? Why would anyone put $5 billion into this company? They wipe out the debt? Great. Okay, wipe out the debt. How much money is this company going to make with 600 million shares outstanding? Because you see, if they make a profit of $600 million without any debt to pay off, okay, and they've never made $600 million, that's $1 a share. That's $1 a share of profit. 15 times earnings means it'll trade at $15 on its earnings results. So your upside is 50% if you take the full risk of $5 billion, and you got to carry 100 million losers with you to the $15 land. I wouldn't do that. Not a chance would I do that. I'd be interested in offering $5 a share, $4 a share after the split. That's 40 cents right now. And I wouldn't put in $5 billion because they don't have to. The company already has $2 billion in cash, or 1.8 billion, whatever it is. This is such a lost deal. I don't know where 16 billion comes from. Where on earth does this guy think they can raise $16 billion? That was never explained in this article. I have no idea what he's talking about. This is fantasy land at a level that I think Jamie Dimon is in fantasy land, let alone this guy. Unbelievable. It's ridiculous. It is just wow. Just wow. These people get paid a lot of money to do these reports. Oodles of cash. What a waste. What a waste. Wow. Whew. Used to be so much easier. JR says Tesla's taking a dive. Giddy up. Well, we're at 193.92, down 85 cents. So there you go. Spicy Android, thumbs up 136, Bruce. Brian Ulkerbruce, there is an article posted an hour ago. GameStop was lower by 1.1% on Tuesday's pre-market trading. Do you think they are reaching just a little bit? Yeah, really. GameStop, 22.58, down 59 cents. Kiwi, I am sad to see SoFi go under $6 again. DQ, Brian, a lot of these are artificial intelligence written auto stories. DQ, you see those across the board for lots, popular stocks. DQ, yes, I agree, but the fact that they are publishing them is sad because they just are horrendous. DQ, Brian, it's clickbait to get them traffic and ad revenue. Brian, maybe pathetic is a better word. Brian, gotcha. So is investigative journalism at its finest. DQ, yep, it's the financial version of a pretty girl thumbnail on a YouTube video. Brian, ooh, where's that pretty girl? DQ, I think she's probably still in bed. Ask Uncle Bruce. Brian, brownie points for DQ. There you go. Oh man, it's unbelievable. It's just the crap that's going on out there. It just is. Oh man, I'll tell you. I am thinking of people I used to work with in the brokerage business when I first entered the business. Man, oh man, I got to know some of these veterans who'd been in the business 20, 30 years. You know, when I first joined in 1979. I met guys that had been brokers since the 50s, and they had seen it all already. And in today's world, they'd be just shaking their heads going, nothing's changed. Nothing has changed. The bullshit is still just as high as it always was. It's just presented to you in a different format. That's all it is. There used to be, we used to call tout sheets. I don't know if you ever heard of those, but we used to get these newsletters that would come into the brokerage firm. And what would happen is a group of guys would write a bunch of articles on stocks that they liked, promoters, tout sheets, and they would then print off several thousand copies in say, the city of Calgary or Toronto or Vancouver or wherever. And this would be in Chicago, New York, Boston, Philly, all over. And these guys would send a courier over to a brokerage firm with an envelope with like 200 copies of the tout sheet. And they would instruct the receptionist to make sure every broker gets a copy. So she would, one of the office staff would go up and down the desks, and we'd have an inbox, and I'd get this long piece of foolscap every day or two. And on the top, it would say, investors alert or whatever the bullshit title was of their little publication. There's no advertising on it because it's unadvertisable. And these guys would write a story, a paragraph or two about 10 different stocks on foolscap on one side and the other. and it's all promotion. These are promoters for these 10 stocks, and they would write updates on these 10 companies. It would be a mining company and an oil and gas company and whatever companies, and they would just land on my desk all the time. And there was more than one tout sheet making the rounds every week in those days. And I'd have to go to the bathroom and do a number one or a number two. I'd take the tout sheet with me, and I'd sit there and do my business, and I would read the tout sheet and just go, wow, unbelievable. And then I'd throw it in the garbage and come back to my desk. But I read it. Everybody else read it. And then we'd comment, go, oh, yeah, that oil and gas stock that was written up in that tout sheet yesterday, check out the market. It's up 50 cents a share, 20 cents a share. And inevitably, phones would ring in the office of the brokerage office from clients that would hear a hot tip on a hot stock, the tout sheets, and some of them would try to play the market. Sound familiar? People are playing the market now. They're trying to catch a momentum trade. It's exactly the same thing. It was just done in slow motion through the phone calls. Unbelievable. This was done so many times, and it was done in so many different publications. Some were magazine style that really had ads in them. Some of them were looked like a racing form. They'd be in a black and white print format, and they'd be like 12 pages. And there would be little ads here and there that they would sell. The ads would be of XYZ Oil and Gas trying to promote its stock as an ad. They would have an ad saying, hottest investment, drilling for production in so-and-so Alberta, or 98% success rate on oil well drilling, or whatever, trying to promote themselves to anyone. Please buy my stock. The promotion game never stops. So these veterans that I knew that were in the business in the 50s, the 60s, the 70s, the 80s, they were just as knowledgeable, if not more knowledgeable, than right now what's going on. But to read this article to you is an example of the kind of touting that's going on. That's a tout sheet article. That's all that is. And MarketWatch is promoting it. And did they get paid to print it? Maybe they did. I don't know for sure if they got paid or not. If they didn't get paid, there were all kinds of ads, banner ads on both sides of the article as I was reading it to you, and they got paid to print it. I mean, that's the bottom line. They're getting eyeballs to read these articles, and they're getting ad revenue from the eyeballs. It's as simple as that. There's nothing magical to it. And away we go. Unbelievable. Now, did AMC pay this guy to do this? Maybe not. I don't know. AMC has expenses. They have research. They have consulting fees that are not disclosed in the notes of financial reports. You'll never know. It's buried deep in the financials. You're never going to find that out as a shareholder of the company. You do not know. You do not know of the stocks that you own, how many millions of dollars are spent by the public company to promote itself through all kinds of what seems to be legitimate press. You don't know. That's just the way this business is. It's unbelievable. Welcome to the party, pal. It is just it's ridiculous. It's just ridiculous. Anyway, there you go. Never a dull moment in this world in which we live. I'm just trying to fill you in plain English what's really going on out there, and it's in some cases it's really, really scary. I wonder how many millions of dollars was spent by the management of Silicon Valley Bank and Signature Bank and now First Republic. How many millions have been spent in the last 5 years to PR professionals to get their word out to all the brokers on Wall Street and elsewhere to promote their shares and promote their bank's prospects and to let the world know how great they're doing, how incredibly their assets are growing, and how profitable their business is, and on it goes. We'll never know. These entities, two of them are bankrupt. One is about to go, or maybe is on the verge. I don't know. And then you've got Mr. Diamond, who wants unfettered access to just do whatever he feels is best for his accounts, for his bank, and not have to adhere to all these restrictive rules that the the Treasury and the Federal Reserve is keeping him under so that he won't go wild out there and leverage up his JP Morgan to 100 to 1. He and all his pals who are desperate to leverage out trillions, hundreds of trillions of dollars into billions of trillions of dollars. There is a desperate move afoot to make this happen because these kids are looking for, they want to become trillionaires. They want to become mega trillionaires. There's no limit to how much money they want to make. The fact that they're the guy cleaning his waste paper basket makes $12 an hour, too damn bad. You should have studied, how to manipulate markets, but you didn't. You decided to become a specialist in cleaning up garbage cans. Well, I pay $12 an hour for that through some agency somewhere. Get out of my office. Let's move on. So much fun. Yeehaw! Everybody, welcome to the party, pal. It's just so much. It's just so much fun. It just never ends. Where are we now? Kaiser trip. So what are you saying is to be a bear right now? Bear rant. JR, I didn't know Alberto was giving pile dancing lessons. Where is he anyway? Brian, love these rants, although he didn't mention how much money these banks put in derivatives bets using your money. I could read it. Could be a quadrillion dollars. They had to make up a new number here. Nathaniel, wow, isn't that 100,000? Isn't that 1,000 trillion? 1 billion, billions, trillions? Nathaniel, so much money in the world. It's unbelievable. Credit Savage, I know this old man that is always saying you can't grow by getting smaller, and I believe him. I'm drinking that Kool-Aid, laugh out loud. Yeah, trying to grow by getting smaller. Unbelievable. People actually fall for this. It's ridiculous. Welcome to the party, kids. It's just another day. Remember, it's not personal. It's just business. It's nothing personal. Mr. Diamond doesn't hate you. He's just trying to exploit you. He's just trying to get your tax dollars to make him richer in an artificial way. So knowing that whatever bets he makes, you, the taxpayer, will bail him out. That's all. It's nothing personal. It's just a business arrangement that works for him. It works very, very well for him. And why wouldn't he want to keep that going? Absolutely. Why not? It's such a great country. It's unbelievable. What can I say? Million is a better world. JR, are there any here who know what Technicolor is? Uncle Bruce, what's Technicolor, please? Look it up. 935 gain, 9.35 gain on the Dow. I think we've got a little buy program in, maybe. I don't know how powerful it is. I'm not sure how real it is, but GameStop is 22.54, down 63 cents. We're down 0.6 of a penny on Cyxtera. ATIP is down 0.3 of a penny. SoFi down 2 cents to 601. Tesla is now up 36 cents. Apple up 54. So we have a little buy wave that's come in at the moment. We're up 8 on the Dow, 6 on S&P, and we're up 23 on NASDAQ as the markets are desperately looking for a little gain. Good news for the markets. Why are they higher? U.S. job openings fell to 9.9 million job openings from 10.6 million job openings. They are looking at this going, yes, the job market is failing. Finally, the job market is beginning to fail. This is great because we could have lower interest rates and higher bank profits. Oh, isn't this wonderful? U.S. factory orders are down 0.7% in February versus consensus of 0.5%. This is also, again, more positive news. A slowing economy, a recession might be coming, and this takes the heat off the Fed to have to keep raising rates, which means bond prices could go up as interest rates might come down, maybe, possibly. I don't know if the Fed will nibble on this or not. So much fun. Never a dull moment in this world whatsoever. Now, having said that, the Dow just went up. It would appear we're now down 31 points on the Dow as this continues to filter in. The good news, maybe we're entering recession. The bad news, corporate America will not deliver on results that they promised their shareholders. They will fall short of estimates. And this means a lower market because it means PE multiples will be higher than they should be. PE multiples have to come down, which means stock prices have to come down. This was what has to happen for companies that do not deliver on the bottom line. But there will be the gamblers on both sides of this market opposed to each other. One expecting lower interest rates will make the markets go higher. Others going, slowing economy means corporate America, corporate Canada, corporate Europe will not deliver on results. That can't be good. So there is what we have. What else is going on here? Have I caught up to all of you guys here? Started a 50 short seller on AMC, hoping to catch some money to sort my GameStop journey, says Splair. 50 units. Brian, I hope GameStop crashes today to follow AMC. I want to buy back some August 1875s that I sold for $605. There you go. Brian is looking for a deal on his 1875s. GameStop, $22.53, down 64 cents is where we're at here. The Dow off 24 right now. S&P is up just 4. NASDAQ is up 20 points. We got Tesla up 15 cents. Apple up 29 cents. That's it. We're up 46 on Unity. We're up 2 on HBQ. First Republic Bank down 81 cents to $13.79. Google up 94 cents. Moderna down 163. Cisco up 3. Pfizer down 13. IBM down 31. Microsoft up 207. ME up 2.5 cents. Matterport down 3. Rocket Lab down 4.3 cents. SmartRent up 1.5. Spire down 0.3 of a penny. The Dow down 12 as we speak right now. That's the story as I see it. I'm sticking to it. See what happens here. Late here to the party, says Susan Shops About, but this is the number 148 thumbs up. Thank you, Susan, for your thumbs up today. And all of you already, the 147 of you who have already hit the thumbs up button, I appreciate this. As you all, I'm sure, are aware. If you're able to find a thumbs up button on your system, please hit that thing for me right now. We need 52 more thumbs ups to get to 200. Auntie Jen is walking in the room. She alone deserves 52 thumbs ups for what she's gone through for you people.
Yeah. I haven't looked outside. What's it like out there?
I have no idea. It was dark when I was out. No.
Is there anything left in the patio? Everything got blown away.
Everything was dark.
Yeah.
You're the one looking at daylight out there. I'm stuck here with these guys, which are some of the finest YouTubers in the world, but I'm stuck here with these guys. I have no idea what it's like outside. There you go. That's worth another 50 thumbs up. So let's go to 250 right now, you guys. Come on. I mean, Jen is singing for you. What more do you want? Come on. Oh, jeez.
It might be a Yoko Ono experience.
Good morning, Jen from Larry Titus. Jeff, GameStop, come to Papa. Brian, Uncle Bruce, how much do you think the U.S. government pays in interest for their $34 trillion in debt? Do you think their yearly GDP covers it? The debt is cheap. It's cheap. America has cheap debt. America bought back every week for the last 15 years, up until just this last 6 months. For every week, for 15 years, America bought back debt that they issued back in the 90s and the early 2000s, where they were paying 6-8% interest. They rolled it into new debt at 1.5%. 1.25%, 1.75%. The United States taxpayer has had the greatest gift given to them with zero interest rates. People don't understand this because the rates were so low. The old debt is cheaper. It got bought out because it matured and it's been replaced with the new debt at much lower pennies on the dollar. It's absolutely fabulous. The other thing that's working now, this is the kooky part. We have inflation now. We have inflation 6-8%. We get 5 years of inflation. Let's just suppose the debt we've now issued in the last 20 years to replace all that debt from the 90s and the 2000s, that will all come due in 15, 20 years from now. That debt will be issued and replaced with inflated dollars, so that $1 today is 60 cents down the road. Plus, it was only 1.5% interest. The American people have gotten incredibly wealthy because of this entire zero interest policy. This is why corporate America has done so well. And this is why corporate America is not panicking right now about higher interest rates. Corporate America is sitting on cash. Look at the cash in Microsoft. Look at the cash in Apple, Oracle, Cisco. Name them all. The corporate America is sitting on trillions of dollars of cash that they borrowed in the last 10 years for nothing. Nothing. And they're not spending it because they're making money. They don't need to spend they've got it. What are they doing with the money? Stock buybacks. How's the government trying to make money on stock buybacks? Putting in a 1% stock buybacks tax. Because corporate America won't pay income tax. They defer their money, delay it offshore. They won't bring it back to America. So as the corporations borrow money in America against the money they have offshore to buy back stock in America, the United States government is putting a 1% tax on the stock buybacks in America to get the tax that they can't get from the companies because it's offshore. It's a shell game. It's a beautiful shell game. Everyone's ahead of everyone else in this, and there are lobbyists everywhere saying, don't change a thing. Don't change a thing. It's just perfect the way it is. Because corporate America wins. The top 1% inside these corporations get mega rich. The bankers can sell stock without reporting it. And guess who's left holding the bag? The ones at the bottom. It's a wonderful system. Brian, your government loves you.
I always say you don't create new money. You just move it around.
That's right. You just move it around. AI has backed off $5 in half an hour. This is wonderful. I think those 22 and a halves I already rolled over 3 times may just be safe. Stock price 29 around now. Oh, ho, ho, ho. ho. BW number 54, high gen mission today. Deploy stink offers to get off July 20s. Short poor man cover calls up to $25 somewhere else later in the year. But best part is I really don't have to do a darn thing either. Thanks, Uncle Bruce. Thank you. There you go, kids. Welcome to the party, pal. The Dow's off 27 points. Unbelievable. Oh, so much fun. So much fun.
That's flat.
Yeah, it's
not
nothing
really sure what it's doing.
It's a nothing burger.
Yeah.
Got nothing going on.
Yeah. Any volume on anything? GameStop 22.60.
Yeah, we're off 57 cents.
Where's SoFi holding 6?
SoFi's holding 6.
Good.
The story this morning in the Wall Street Journal was the one bank that went under was in New York called Signature Bank.
Okay.
There was Silicon Valley Bank in one that went under, and in New York there was a crypto bank, Signature. Signature and Silicon Valley were Wall Street darlings. These stocks were Wall Street darlings. They had just gone up and up and up. Today, a report came out from Wall Street Journal that the top 3 insiders of Signature Bank in the last year and a half dumped $100 million of stock in the market for themselves personally. And it was never reported through the SEC.
Ouch.
Oh, surprise, Auntie Jen. So what happened was
they get to go to jail?
No, what happened was they the bank filed on their behalf their stock sales, but they reported it to the FDIC rather than to the SEC. The FDIC, of course, just buries these reports deep in their files. And if you want to do an investigative search through the FDIC allows you to withdraw 1 file at a time. So you can't do something like show me all insider transactions for Mr. Schmuck over the last 3 years. Oh, no. You can only request 1 file at a time. This is laboriously slow. And so the street did not know, while Wall Street was pumping up Signature Bank stock and touting it to all their clients, their innocent victims.
It's like the royal pump and dump.
These insiders are dumping the stock, $100 million personally. And the company was involved in crypto financing, big time, which of course topped out at whatever $60,000 a coin and went all the way down. And now they're upside down. They got all kinds of withdrawals, and they were insolvent in no time. And so these insiders are very well to do, even though they're found, but they're out of a job, but they're quite wealthy. And the investors of the bank are out to lunch, lost everything. And the SEC is saying, well, we didn't know they were selling, so we couldn't enforce anything on them. The FDIC is saying, well, they filed with us.
They did what they had to.
And the other argument was, and analysts who have looked at these filings are now looking at the filings,
Yeah.
the actual documents, and are going, these documents don't indicate whether these guys sold stock in the open market or whether they had shares bought back from them by the bank.
Right.
Because a lot of these investors, these insiders, they get stock options, and it's a stock option salary arrangement for their employment contract. You get $1 million in salary and you get 10 million in stock, but the stock is exercisable at a set price per share, usually the low of the year, maybe 10% below the low of the year.
Yeah.
So the insider will say, I'm going to buy my stock and sell my stock and make the profit between what I can buy it for and sell it for. Then I'll pay my income tax on that gain, because it's a income. It's income, not capital. It's income.
Oh, that's right.
Because he's an insider.
Yes.
The bank will make an arrangement. They'll lend him the money. This is all done in nanoseconds. We'll lend you the money to buy the stock from the bank, and then the bank will buy the stock back from you at the market, because the bank has a stock buyback program. You love those stock buyback programs? I just love those. So the bank buys the stock back from the guy who just bought the stock from the bank at a higher price, allowing this guy to score $5 a share profit on 10 million shares, $50 million in profit. He pays $15 million to the tax man, keeps $35 million for himself on a nanosecond loan.
It was a good Monday.
This was a good day. And the bank is happy because there are no new shares outstanding. Now, that is an insider deal that
happens all the
time. But that's not what happened. That's not what happened. Well, what happened, Bruce? Well, what happened was the insiders borrowed the money probably from the bank, but likely from their brokers. Again, the brokers that are touting the stock to their clients. And the guy borrowed money from the broker.
That's why
to buy the stock from the treasury of the bank, making the insider look like he's investing in his bank. See?
Yeah.
And then he turned around and sold the stock in the open market using the broker he borrowed the money from to buy the stock. And who's buying that stock? The suckers that are the customers of the broker. That's the tout sheet. And so the brokers are calling the hedge funds, pension funds, mutual funds, and everybody else, and any other customers to buy up this block of stock from the president of the company who's offloading them, who just put money into the bank itself. And he's keeping the $50 million profit, less $15 million tax bill. He just made himself $35 million.
In your quarterly reports, though.
Not being reported to the SEC. SEC knows nothing about this.
But in your quarterly reports, don't you have to indicate how many shares each insider has?
Yeah.
Doesn't anybody read it from one quarter to the next quarter to see what happened in that quarter?
Okay, last quarter, Joe Schmuck, the president of the bank, owned 1 million shares of the bank.
Yeah.
This quarter, he owns 1 million shares of the bank.
And it doesn't show transactions.
It doesn't show the fact that he bought 10 million and sold 10 million on the same day. It's how many shares do you have at the reporting period? Each quarter, you have a reporting period, and he reports his position.
Loophole.
I own 1 million shares. I owned 1 million last quarter. I own 1 million this quarter. There's no change.
That's right.
The fact that I bought a new house in Miami on the waterfront for $5 million in cash, I'm just a really good. I'm a really good bank president, you know. And look how rich my investors are. Look at the stock of my bank. Every brokerage firm in Wall Street promotes it. That's right.
Wow.
And these guys use Wall Street to buy mortgage-backed securities with depositors' money. They buy these assets and sell these assets through the brokerage firms in New York that tout the stock to their clients who buy the stock because it's a legitimate company, because they're dealing with us. After all, if you're dealing with JP Morgan, you're legitimate. So why wouldn't I buy the stock? Because the JP Morgan recommends it. Well, Diamond wouldn't recommend a bank that is illegitimate. Now, would he? No. Oh, no. The Big Short was just a fictional movie. That was all pretend. That was those are actors. Would I? Oh, we're getting in trouble now. I'm telling you.
Never mind.
Never mind.
Well, on that cheery note.
On that happy note, where the markets are just fine for everybody. Don't forget, if there's any indiscrepancies in the trading of stocks, Don't worry, the Congress and the Senate will call investigative hearings
SEC will
right
be
away.
investigated.
We'll bring John Gill right back here and we'll get him to answer those damn yes or no questions. We'll get John Gill in here. We'll find out what's really going on with this stock because we know it's those damn retail
Then we'll
investors
tell you in
who
10
watch
years.
Uncle Bruce and all these other YouTube channels. They're the ones, they're the
That's stupid
troublemakers.
money.
Yeah, how dare you ask questions? How dare you investigate
That's right.
what we do? You don't trust us? How dare you? Oh, we'll show you.
Yeah,
You want to
sure.
trust us? Oh, well, we'll call you in then. Yeah. And whatever John Gill says is what everyone on Uncle Bruce's channel says. That's what you think out there. We know what you think. We talk to John Gill. We know what's going on.
They got you riled up today.
Oh, they love it when they get me riled up. They love it. Have a great day, everybody. Thank you for the thumbs ups. Auntie Jen's appearance made us go from 150 thumbs ups to 160 thumbs ups. Thank you so much for giving us 10 thumbs ups with Jennifer here today. I'm not impressed. Anyway, thank you, Auntie Jen. See you later. Thank you all for the 10 thumbs ups. At least it's something, I guess. I don't know. I do the best I can with what I have. Anyway, there you are. What else is going on here? Let's go. How about that Kraken game last night? Hello, Jen from John. That's my line for starting a story. What had happened was Susan Shops About says to Hector, my house rebuilding is going as good as can be expected. Building costs sky high. A lot of interviewing and cleanup. So much fire and soot, water damage, but trying to salvage paperwork and stuff as best we can. Credit Savage, Uncle Bruce. These AI covered calls, they're April 21s. Were 20s originally. I sold for 7 in February. I rolled for around 5 in cash for time. I even questioned rolling a bit, then remembered who my mentor is. Now I just collect the money. There you go, Hector. Susan Shops, I'm glad that you have salvageable items. The Credit Savage. It all starts with class number 1, boys and girls. What class should you buy to make money? Class number 1, then number 2, then number 3, then number 4. Watch and rewatch. Ask questions. We're here every day. Hello. Hector, the Credit Savage. Don't forget the package deal option on classes. Zed Estate, 163 thumbs ups. Neat. Splayer, it's just a day to get tired here. Marcus, number 170. Neat. Thank you, you guys, for coming through for us. 172 thumbs ups. We need 28 more to get to 200. Come on. Give us some thumbs ups out there, you guys. Let's get to 200. Come on. You know you can do it. Let's go. We're down 100 points on the Dow. Apparently, losses on shares of Caterpillar and Boeing are causing the markets to back off in the Dow. We're down 6 points on S&P. We're down 17.79 on NASDAQ. We're not even an hour into trading, and this is the second dip in the first hour of trading, and this one is bigger than the first one, and I think this is our pattern today. I think we're going to have a down day today. And it could be much, much worse, but I could be wrong, depending on how much money wants to go in here. Zed Estate, neat. There you go. Sextera, 29.3 cents a share, down 2.4 cents a share today on Sextera. Bargoon, 437,000 traded. Another was a 2 million yesterday. Again, what a day. 22.31 on your GameStop, down 85 cents on 1 million shares in the first hour. This stock isn't going anywhere. Really, the fact it's hanging around here, doing pretty well. ATIP, 26 cents, down 0.4 of a penny. SoFi, 5.94, down 9 cents. Bargoon. Tesla, 192.82, down 195 and falling. Apple, down 24 cents, 165.93. All-time high for Apple, 178.30. That is 13 odd dollars away from here. Don't know if we're going to hit it. Unity Software, down 3 cents. HPQ, down 19. First Republic Bank, 13.66, down 94 cents. My question is, how many shares of stock did the insiders of this company sell in the last 2 years that we don't know about? That is my question. It's the same at Signature Bank, over at Silicon Valley Bank, and what about all the other banks in this neighborhood? How many shares, how many hundreds of millions of dollars did these characters blow off while the street was sucked into buying in? I don't know. I don't know if it happened on First Republic. Do you trust them? How can you verify? How do you know? That's what I want to know. Is there going to be a congressional hearing about it? Let me think. Let me hear. Let me see if I can hear anything from the Congressional Hearing Committee. I hear crickets. I don't think anything's happening from the Congress because, after all, it's a Republican Congress now. You think that those Republicans are going to call bankers in to talk about insider trade? I mean, come on. Really? Oh, please. Oh, gosh. Hector, neat. BW. If no response yet to money sent for classes, are we still good? If you have sent me a deposit and you've sent me an email, then I have it, and you should be good. Yes, there are a bunch of you who have done this, and we should all be good. If you do want me to respond, you can always send me a quick little email saying, just checking to make sure I got it. I'll say yes, but I can't send you a 2-paragraph answer. I have no time to do that. But all should be good. If you've made a PayPal deposit, I got it. And if your records show you've paid it, I've got it, and you're in. The Big E, neat. John Anderson, neat. Zed Estate. Uncle Bruce, my favorite stock, Zim, ex-dividend has passed, promising $6.40 a share. The stock gapped down to $18. Unbelievable. Karim, neat. Keep us posted, Zed Estate, taking those dollars. What can I say? We are now down 83 on the Dow. We're off 7 on S&P. We're down 19 on NASDAQ. Approaching the 2-hour session, 2-hour mark of this session. Thank you so much, all of you, for joining me yet again today. Hope you learned a little more today about how the markets have worked and how they work today and how things are going. It's unbelievable out there. 22.40 on GameStop, down 22.39, down 78 cents right now. Tesla down 152 a share. We have 174 thumbs ups, and I thank you all for that. If you're able to find that thumbs up button, please hit that sucker for us and get us closer to 200 thumbs ups. Thank you, all of you out there who give me thumbs ups on the replay. You guys are absolutely wonderful. Grid Savage, Zed, I got 100 shares of Zim at 18. It went down to 17, but my stink bid was 18.01. BW, okay, thanks. Because I did it over the weekend, and because you usually are wasting away soaking up the sun in the hot tub doing nothing, I didn't know you got back to work yet. Thank you for those kind words. Hector Uggerus, thank you. Have a great day, everybody. You got it. Oh my, Credit Savage, thumbs ups and neat emojis. Thank you, Credit Savage, for these thumbs ups. 175 have come in. We need 25 more to get to 200. The neat emojis attack is underway. You're all welcome to join the party, pals. Neat. Come on in. Here comes Splair. Here they go. 91-point drop on the Dow. Sextera, 29 cents, down 2.6. GameStop, 22.39. ATIP 26.1 down 2/10. SoFi down 8. Tesla down 133. GameStop is off 78 cents right now. Uncle Bruce, as you had suggested to do cover calls, and I am buying back. I am buying more Zim with the profits. Beautiful job, buddy. Beautiful. J-Boy, 176 on the thumbs up, buddy. Always late, but always here. Thank you, J-Boy. Let me say to you all something new, Splair says. Neat. Larry Titus, knee emojis, thumbs ups. Thank you, everybody, for the knee emoji attack. Having fun here on the old channel, trying to get through another session. 177 thumbs ups. They keep coming. Thank you, everybody. Beautiful job. Oh, so much fun. It never ends. There's never a dull moment around here. Oh, man. The low today for GameStop, 22.25. The high, 23.14. We're at 22.38 right now. The U.S. factory orders fell more than forecast in February, and job openings in the United States have fallen to a 21-month low of 9.9 million job openings. I think it's 9.9 million, something like that. Still a ton, but that's what it is. Jimmy Wilkes, 175. Hey, Jen, let's go. Thank you, Jimmy. Welcome, my friend, to this channel. I'm glad you're here, pal. Zed Estate, the Credit Savage, but you missed the dividend that you offset by the price. Awesome. John Anderson, thanks, everybody. Splair, again, have a wonderful, successful, and relaxed one today, everybody. Splair's giving us knee emoji. So is Karen. Thank you all very much for that. 177 thumbs ups and counting. It is much appreciated. Thank you all for being members of this channel. Those of you renewing your memberships, becoming brand new members, you guys are freaking awesome. Thank you so much for the support, keeping us on the air yet again. There it is. So much fun, so much stuff going on. It's unbelievable what's going on. Jimmy, thanks, pal, for being here. Glad to see you here, man. This is great. Thank you, John, and Splair and Karen. And thank you to Larry Titus, of course. Thank you to J-Boy, Zeta State. Thank you to Credit Savage. Hector has been here. BW, of course. Thank you. Thank you all for being around. Karima, of course, the Big E is here. Thank you. Who else is here? Marcus is here today. Who else was around here? Susan Shops About was here. BW, of course. Thank you all so very much. DH Ruda, thank you, my friend. Richard Carlin, thank you. Neat. The emojis are coming through. And thank you, those of you who signed up for your class this Saturday. By all means, sign up ASAP so Jen and I know exactly how many folks we're dealing with here. The whiteboard is ready. It's got to unwrap it and get her set up. We're ready to roll Saturday morning. Saturday at 2 o'clock Eastern time for you guys out east, 11 o'clock here in Los Angeles, where I am in Palm Desert, and of course in the afternoon, evening in Europe. So everyone can attend, everyone can join in. Looking forward to having you all come through. Thank you, Brent, today for becoming a member of the class. I got your donation, Brent. You are in the class for sure. Your donation arrived through PayPal. You're good to go. And thank you, my friend, for that. And I welcome all of you who are popping into the class, popping into this channel, becoming members of this channel and followers. Of course, you guys are absolutely awesome. 178 thumbs ups, 22 to go. Thank you. Thank you. BW says, since I gave you some flack, you deserve one of these. Neat. Thank you, my friend. Beach Boy, neat. I'm here, Bruce. I'm alive. Beach Boy is still around. Thank you, pal. Good to see you here. Alberto, wherever you are, hang in there, pal. And I'm looking forward to seeing those two characters. They'll be here Saturday. Count on that. They're here. Hawkeye with arms crossed works for me best when I place my stink bids and stink asks, and then I let the market carry on my way. Right on, Hawkeye. Well done. Thanks, Uncle B. Thank you, Hawkeye. Well done, everyone. Making money in the option market. They're handing it to you. You've got to take it. You've got to learn how to take this money. You've got to learn. Alex, Viva Beach Boy, Hector, Beach Boy, check your email. There you go. Welcome to the party, everybody. Thank you all. I will see you tomorrow, being Wednesday. And don't forget, tomorrow night, 8 o'clock Eastern time, Gold Bagel members, prime time with Uncle Bruce tomorrow night, 8 o'clock, just for you guys. So become a Gold Bagel member immediately on this channel. If you've got a regular membership, upgrade immediately to gold level status, and you can join me prime time tomorrow night as well. And of course, every morning for the pre-alert show at about 8 Eastern for the Gold Bagel members only. So by all means, pop on in and join up and sign up, and let's go. Thank you, everybody. 22.47 on GameStop, down 70 cents. SoFi down 8, Tesla down 85 cents right now. That's where we're at. Thank you all. Uncle Bruce, thanks you for the rant in Technicolor today. Thank you. You're welcome, Beach Boy. Today was a Technicolor rant for everyone to enjoy. Look it up on Google if you don't know what that means. There it is. Splair, sleep enough tomorrow, you all. There you go. Splair, Zeta State, Beach Boy. Neat. Thank you, everybody. Have a good one. We'll catch you tomorrow. Keep an eye on the channel for updates. We'll talk to you soon. And bye for now.